Hello, everyone. Thank you for joining us. I'm one of the co-founders at Bitsilk Investments, and today we have a really exciting presentation for you. I'm joined by our consumer retail industry analyst, Stephen Lynch, who was previously an equity associate at Betas Bank, and before that, a trading analyst at SIG after graduating from Dublin City University. And today, Stephen is going to take us through some of the key trends affecting the consumer space, what we need to watch for going forward, and how he's personally positioning himself going into the next 6 months to 5 years. So without further ado, let's get started.
Stephen, do you want to tell us a little bit about the health of the consumer?
Of course. Thank you very much for the nice introduction. The current macro backdrop is not supportive for any sector, especially not the consumer and retail. We are seeing deteriorating consumer confidence and rising unemployment. The economy is expected to grow at a similar rate in 2020 as it did in 2019. Considering the impact of COVID-19, annual GDP growth is now projected to drop to 2.4% in 2020 from an already weak 2.9% in 2019. Global supply chains have been adversely affected by COVID. It is expected that firms will look to diversify their supply chain to help mitigate risk of further disruption. Despite all the doom and gloom, we are seeing that online retailers are performing very well, something which we will discuss later on. We have seen some improvement in job numbers coming from the US, which really gave the sector a lift last week. Further easing of restrictions is also being welcomed by the market. As we discussed in our report, the speed of recovery in sales is in the hands of the consumer and their willingness to spend. There is still so much uncertainty in the market, so I believe people will remain cautious, especially in the short term.
Thank you for that. So it seems like there's definitely a lot of opportunity despite this poor macro backdrop. So I think it would be interesting to hear what are some of the trends in the industry.
There are two key trends which are driving the retail sector, either e-commerce and m-commerce. Firstly, in terms of e-commerce, it is expected that e-commerce sales will double between 2018 and 2023, surpassing the $6 trillion mark. Black Friday shopping sales at brick-and-mortar stores dropped 6% in 2019. Over $9.4 billion in online sales occurred on Cyber Monday. Examining the long-term prospects, it is estimated that consumers will make 95% of purchases online by 2040. Online sales momentum remains strong, generating stable double-digit growth. Now looking at m-commerce, which is expected to grow at 29% year on year. Mobile adoption rates are growing 8 times faster than web adoption did in the early 90s and 2000s. There are 1.6 billion smartphones sold in 2016 worldwide. That is 23 times the peak number of film cameras and 13 times the number of digital cameras ever sold. Mobiles are reducing shopping time. Over 70% of mobile searches lead to action within the first hour. In comparison, it takes the same share of desktop users a full month to reach a buying decision. Now the question remains, are these two trends the end of traditional brick and mortar stores? In my view, no, I don't think so, especially not in the short to mid-term. That being said, traditional retailers need to make changes to their stores in terms of functionality, turning them into distribution hubs, offering click and collect, and enhancing the consumer in-store experience.
Yeah, so it seems like there's plenty going on in the retail space, and there's plenty of opportunity out there on the back of these two megatrends. So do you want to talk to me a little bit about the landscape or the competitive landscape for e-commerce players and some of the key success factors?
Yeah, as you can imagine, there's intense competition for online sales, which has only been enhanced by the COVID-19 pandemic. The important thing to remember is the consumer is key, no matter how cliche it sounds. Every brand wants to be on the platform where the most consumers are. In the retail space, both Zalando and Amazon offer this access to a massive pool of customers. Long gone are the days when you would have 10 or so retail apps, the likes of Hugo Boss, Nike, Adidas. People now have 1 or 2 apps, such as Zalando, which offers access to all the brands, and this is the secret to success. It takes time to build an online presence, of which so many players are doing, but for so many smaller retailers, they do not have the resources or the capacity to do this. The use of these online marketplaces provide the perfect platform to get their product to the masses.
That's great. So could you tell me, so you've covered up till now, what are some of the important things and what are some of the changes that have gone on in the industry? Is there anything important that we should be watching going forward?
I think in the retail space, there are several things which investors should look out for. Firstly, on the macro side, should be focusing on the level of consumer confidence in the market and how it will develop over the coming months. Examining both the GDP and job numbers will give a good indication of the speed of the recovery. Focusing more on the single stock side, I'll be waiting to see the numbers which are released in the coming weeks and to what extent traditional brick and mortar sales held up. We'll also get a first glimpse of how strong online retailers have performed, which could act as a real accelerator for their share price. It'll also be interesting to keep a close eye on the firm's guidance in the coming months and see if there'll be any adjustments to the upside or downside.
Great. So you've summed up pretty elegantly how we've come all the way top down into the sectors and then what we should be watching out for going forward. Could you tell us a little bit about how you're positioning yourself within this trend?
Yeah, of course. I think positioning is always such a hard question, especially in this type of volatile market. Looking at the various segments, I see the online retailers as the most attractive in the retail space. These retailers have received a large uptick in orders since the lockdown was introduced. As a result, my two top picks in this trend would be Seve and Zalando. Firstly, on Zalando. Zalando is a German online fashion retail marketplace which allows brands to sell their products. It has seen its share price rise 70% in the last 3 months, rebounding from lows of €29.50 on the 23rd of March. They are guiding for high double-digit teen growth on the top line, which is very bullish, especially for a fashion segment, which is expected to show negative growth in 2020. In addition, they have seen rapid growth in their partnership program, adding the likes of Next and American Eagle. In April, brick-and-mortar retailers in Germany and the Netherlands shipped almost 350,000 items to Zalando customers. Second stock, which I think is really exciting, is Seve. Seve is a leading photo finishing company with a strong presence in the DACH region. It operates across 3 core business units: photo finishing, 76% of sales, online commercial printing, 15%, and retail, 9%. Seve is a high-quality company with a strong management track record and a rock-solid balance sheet. They are well positioned to benefit from industry trends of shifting from analog to digital. The photo finishing unit is expected to benefit from an increased share of more profitable photographs, supporting a margin expansion. In my view, a key driver of future growth is the commercial printing division. I believe that both of these stocks are well positioned to benefit from key megatrends which are driving the sector. More details of both companies can be found in my previous publications. I also like Hugo Boss as a short-term trading idea, while I think Adidas' current valuation must be looked at.
Well, definitely some very, very good investment ideas in the short, medium, and long term. I want to thank you for presenting your work with us here today, Stephen. And hopefully in the next 2 to 3 months, we can get you back on and we can mark your homework.
Thank you very much, Sam. Thanks for having me again.
Thank you so much. Bye-bye.